I'm very bullish on metals long term. I think gold will be above 10,000 probably in a few years from now. Silver will probably be at 200 and change. So I think there's some great upside, but I also think there's a lot more potential by navigating it. And if gold and silver don't go anywhere for a year or two, I want to put my money somewhere else and be making some type of return on it, and then move back into the precious metal space when the train's leaving the station and starting to run higher again.
We think that the dramatic move will likely be mostly done by summer, and I think silver could easily be to $300 to $500 an ounce. They're going to print, print, print. Gold smiles. That's what gold is. It's money. They destroy paper money, gold goes up.
What if I told you gold could hit $10,000 and silver could explode to $300, even $500 per ounce? Sounds crazy, right? But according to top analysts like Chris Vermeulen and Michael Oliver, we're not just in a bull market. We're in a once-in-a-generation supercycle. The catch: the biggest gains won't come from just holding. They'll come from timing the cycles correctly. Let's break down what's coming next and how to position yourself before the next explosive move.
I mean, the long-term trend of precious metals are still up. We got this 150-day moving average sloping up. Price found support. But when we zoom into the shorter term price action, there's a lot of damage that has been done to this chart. So there's two scenarios that is going to play out. So let's just zoom back onto the chart here. And more or less we saw, and this is the same for gold and silver. We saw gold working as a defensive play, and then suddenly we had this breakout, and this whole phase right here was kind of a FOMO. To me, this was a euphoric kind of blow off bubble. Everybody chased it and drove it higher, and it was going to the moon. The market always has a way of wiping out a lot of these emotional moves. Usually you give back half of the move, which it's done, or you give back 100% of that move. And what's interesting is if we look at this most recent chart pattern here for gold, based on this sell off and this bounce, we pretty much come right back down to the market wanting to reset and wipe out everybody who bought on this euphoric phase.
Oof.
And that's about a 25% pullback from where gold is right now. And some people are saying, oh, that's terrible, and they say they don't want it to happen. I honestly think it'll be a very good thing. I'd love to see the markets reset. I'd love to see precious metals crash. The lower they go, the better an opportunity is to purchase more. We ended up selling our gold up above 5,000. We sold silver, all of our silver at 113. And so ideally, if I had a bias, I'm like, I want to see it, gold and silver, crash down to this level. It will reset itself. And then from there, once it starts to turn around and puts a base in, then we can get long again. So that's the bearish scenario. The bullish scenario is we've got this massive run up, and now gold is putting in what could be a giant bull flag. And once it sorts itself out and starts to make a series of higher highs, there'll be an opportunity to get back in. And if this is a bull flag, it's going to be having a very dramatic run, probably up to 8,000 or so to the upside. And we just get back in when it starts to take off and run higher. So those are the scenarios. The one scenario that I don't want to get caught into is holding it and it corrects. Like, obviously this would be a very big correction. This would be like a 36% correction, which is kind of what we saw back in 2008. When we saw the stock market go into a bigger correction, gold pulled back this much. And then this could take a long time. For all we know, could take gold or silver, who knows, 6 months, 12 months, 3 years to recover before it starts to come out of a new launch pad. And so we have a very similar setup, both in gold and silver, as we had in 2011. And it took a long time. It took over a decade for them to come back from the dead and start to make some new all-time highs. So, that's the scenario. There's obviously those two scenarios. I don't want to hold through something that might trade sideways for another year or two. We don't know if that's possible, if that's going to happen. And I don't want to find out the hard way by just letting my money sit there. I want to get out when all the signs are telling us, hey, it's overdone. And I want to ideally load up when it becomes fair value again, or undervalued, or however you want to say it. Just it's corrected in price and take it for another move. So I'm very bullish on metals long term. I think gold will be above 10,000 probably in a few years from now. Silver will probably be at 200 and change. So I think there's some great upside, but I also think there's a lot more potential by navigating it. And if gold and silver go. Don't go anywhere for a year or two. I want to put my money somewhere else and be making some type of return on it, and then move back into the precious metal space when the train's leaving the station and starting to run higher again.
I think you'll come out of this probably pretty soon, meaning like end of this month, early next month. You'll be pushing back up toward the highs again. And if you are, then that's when all the doubters, the ever doubters, I should call them, because they're always doubting it all the way up, silver and gold, will say, oh, golly, gee, it isn't the top after all. Our entry points that we prescribed for entering long based on the long-term technical metrics were over the last couple of years. We're in March of 2024 as silver came up to $25, $26. It had already been up there a couple of times before, but coming up that time, we thought, that's it, you're going to start up. Sure enough, it did. Our next one was in late June of 2025, as silver again approached a level it had been repelled at, $35. Came up for a third time toward that level. We said, that's it, you're going to blow through this time. And our final signal, and the last long-term buy we're going to offer, based on long-term technical metrics, was November last year. And that was based on a breakout by silver versus gold. They were both already going up. Okay, there's no issue about that. But the question was, silver had been lagging gold as a percentage leader in the bull market so far, and was very underpriced to gold. But there was a level reached in November last year that happened to be a month where silver closed out that month at $56, okay? That silver broke out versus gold, saying, hey, I'm going to beat you now in this process. And it did, especially surging into January. And I think it will continue. But that's it for us in terms of long-term buys. So anybody getting in now, yeah, if you're not in, you might want to get in, but we can't offer any initial safe buy signals. The average of our last three buy signals, therefore, the three I just mentioned, was $36. So that's our last major buy. We think that the dramatic move will likely be mostly done by summer. And I think silver could easily be to $300 to $500 an ounce. That sounds lunatic, but there's a lot of reasons for it.
Right now, the big picture is clear. Precious metals are in a long-term uptrend. Why? Simple. Governments are printing money at unprecedented levels. Currencies are losing value. And as Michael Oliver puts it, they destroy paper money, gold goes up. But here's where it gets interesting. In the short term, the market is showing signs of damage after a euphoric rally. Gold and silver recently went through a FOMO-driven surge, a blow-off top where everyone rushed in. And history tells us what happens next. Markets don't go straight up forever. They either correct sharply or move sideways for months, even years. According to Chris Vermeulen, a 25% to 36% pullback in gold wouldn't be surprising, and it might actually be healthy. Because these pullbacks do one thing. They reset the market, they shake out weak hands, and they create massive buying opportunities. Now, there are two scenarios unfolding. Number one, bearish/reset scenario. Gold and silver correct deeply or go sideways. This could last 6 months, maybe even a couple of years. And if that happens, smart money doesn't just sit and wait. They rotate capital into other opportunities, then come back when momentum returns. Number two, bullish/breakout scenario. Instead of crashing, gold forms a massive bull flag. And if that pattern confirms, we could see gold surge toward $8,000 plus, with silver potentially outperforming dramatically. Because historically, silver moves faster and more violently than gold. Now here's the key strategy. Don't blindly hold through dead periods. Don't chase euphoric highs. Wait for confirmation, then strike. That's exactly what these analysts did. They bought silver at key breakout levels, around $25, $35, and $56. But now, they're cautious, because the easy money may already be made for now. Looking at history, gold has delivered 8x moves in past cycles. If that pattern repeats, we're looking at $8,500 plus gold minimum, and possibly much higher in today's extreme monetary environment.
What's really interesting is this type of price action that we have right here is very, very similar for both gold and silver over here. And I don't want to go through this. I don't want to, right?
Me either,
I would like
brother.
to see the markets correct and move back. I remember in 2019, I remember this is where I was saying this is the start of the new super cycle in gold. This is when I loaded up with metals. This is when Eric Sprott said he had talked about getting even more because I gave it the official. This is the next super cycle,
Yep.
and he kind of mentions I'm one of his favorite technical analysts.
Yep.
So I want to avoid all of this, and I just want to. I want people to know when to get in and when a major cycle is coming to an end to get out, and then we wait for the next setup, and then we get back in again. That's what I focus on when it comes to precious metals. I focus on these super cycles because I don't trade them actively. I'm like, I buy a ton of physical metals, play the super cycle, get out of it, wait for a reset or for a new trigger, and then I'll just go back and do that again. So this is the first time since 2019 I am naked in terms of I have no physical metals other than a couple rounds and stuff kicking around the house, right? But it feels really weird. But I know I understand what the charts are doing, and I know there'll be another opportunity. Either I get back in at a better price or I get back in at the same or a higher price later. But the next time I get in is going to be like one of these. It's going to be something like this where it screams higher in value. It's going to be something like this where it breaks out. So like if gold builds a launch pad here for a year and a half and then it starts to break out, I'll get back in probably where I sold it. But the next move up is I double my money very quickly. I want to catch these moves. I don't want to catch these moves.
Right.
I think we might. I think the dust will settle probably by the end of the May. I think we'll get something going, but it's going to be interesting. I mean, both gold and silver have the same type of setup. Silver downside potential is roughly $38 to $40 an ounce, which brings it right back to the breakout point where it went parabolic. The FOMO group of people drove it higher. And, so many people are talking about like the central banks are loading up and they're buying it. You got to get in. I'm like, maybe part of that big dumping is manipulation and they're trying to bash it down. They don't want to keep driving the price higher. They want to get as much as they can and not pay a premium. So who knows why this got hit so hard? And there could still be one more big bout. And I don't think people should look at a big pullback in metals, my bearish view, as a bad thing. I think if anything, they should be looking at it as a positive view because it's a temporary pullback within a super cycle to the upside. And why not be able to buy more at a great price versus wanting it to just scream higher? Because usually what goes straight up comes straight back down, which we've seen that kind of recently. And now it's got to digest that volatility.
I don't have a gold target. The only thing we keep saying about gold is this. Here's the reality. Since it was legalized in the US in 75, at that point, it was making a high at $200 an ounce. It had been 35 back in the early 70s in the spot market. And when the future started trading, January of 1975, gold had reached 200. Okay. Over the next year and a half, it collapsed 50% down to 103, August of 1976. But from that low, August 76, to the 1980 peak, it gained eightfold. Which if you bought gold at the bare low, you made 8 times your money. Okay. Then after going to 850, you never came back down to 100 again. You came back down into the mid 200s. And you based in the year 2000, 2001, around 260. Okay. So we start from that bare low. From that low, over the next 10 years, different period of time, the same dimension move, eightfold gain. Gold went up eightfold times that 260. Okay. Went to 1920. Okay. Then we had another bear market that ended in 2015 at 1,050. You do the math. Eightfold says 8,500 or so. Okay. Even JP Morgan recently came out, I think it was a fundamental type report, and came up with an ultimate target of 9,200 or something. But anyway, we're not setting that as a target. The only thing we're explaining to people is, heck, it's done it twice before under far less driven conditions, monetary factors, emergency monetary factors, than what we're going to see and what we are seeing, and had eightfold moves. So if we do it again, we go to 8,500. And that's just matching what it's already done twice before. So it's almost like, oh, big deal, 8,500. I've done that before, twice. Okay, eightfold gain. I doubt we'll stop there. But that's just to make a point to investors that, 4,000, 5,000 zone for gold is not some overdone level. It's only half as much as the prior two bull markets. And during that same time, and I think by summer probably, silver will be in the $300 to $500 range.
So here's the bottom line. This isn't the end of the bull market. It's a critical turning point inside a supercycle. The next big move is coming, but the winners will be the ones who wait, position, and strike at the right time. If you found this valuable, hit like, subscribe, and share this with someone stacking gold and silver. Because the next phase of this market could change everything.